Good evening. I'm Kelly Evans.
I'm Scott Wapner. This is the 63rd day of this massive global health crisis.
Yeah, we are here tonight because of the violent market reaction to the very real threat the coronavirus is about to impact this country in ways we have never seen before.
Outbreak.
It's a very fast-moving situation.
A dramatic increase in coronavirus cases in Italy.
We are urging Americans to not travel to the areas in Italy.
Mexico reporting new infections as well. Nervous investors prepare for more uncertainty.
The fastest correction the stock market has ever seen.
Asian trading is underway. U.S. futures are now moving, giving us the first indication of what's ahead.
Oh, there will be more cases, there's no question.
We're also live in Washington as the government prepares for the worst. More companies and conferences cancel their slate of meetings.
You think some of these companies perhaps are overreacting?
Not necessarily.
Airlines adjust schedules and call off flights. We are here tonight to bring you the very latest. This CNBC Special Report, Markets in Turmoil, begins right now. Here's Kelly Evans and Scott Wapner.
It is good to have you with us just after 7 p.m. on the East Coast, and we are getting our first look now at U.S. futures, the way that stocks may open tomorrow morning on Wall Street. What was stocks coming off their worst week since the financial crisis. And yes, futures can be volatile and thinly traded at this hour, but at least right now it looks as though the selling on Wall Street is going to continue. The Dow Jones Industrial Average would open with an implied open down more than 300 points, adding to losses of 12% in the last week, Kel, alone.
And as always, we turn to the Asian markets to get a sense of how we'll trade. And here's Japan's Nikkei, which is beginning to trade this hour. There's a drop of 238 points, again, down about 1% for a core market that's been affected by coronavirus and a key benchmark for global markets.
As far as the virus is concerned, here is the very latest. It is spreading tonight. 2 new cases in Seattle. Rhode Island has confirmed its first case. Scotland, the Dominican Republic, and Mexico also confirming new cases tonight.
And a well-known economist at Evercore ISI has cut his target for growth in the United States to 0. And get this, not for the first quarter that we're in right now, for the second and third quarters. And notes from top Wall Street firms like JP Morgan, Citi, and Goldman Sachs are saying stocks have not yet hit a bottom. The coronavirus outbreak is prompting major business cancellations and interruptions. A key energy conference run by Cambridge Energy Associates in Houston, CERAWeek, has just been called off. Target is making its investor meeting remote only. Facebook canceling the F8 Developers Conference. San Francisco's major game developers conference in San Jose called off. News Corp and Amazon have all stopped non-essential travel. United Airlines postponing its Investor Day and new pilot training classes. And Workday has even called off a sales conference.
We have, as you would expect, live team coverage of the key fast-moving parts of this story tonight. Eamon Javers covering the response from Washington. Steve Leisman has new information on anticipated action by central banks. Phil LeBeau is on top of the major changes for U.S. airlines. John Fort with new reporting on productivity concerns for big tech. We do start, though, with Meg Terrell on this fast-spreading virus. Meg?
Hi, Scott. Well, the picture has changed dramatically in the United States since Friday night, as more state and local public health labs have been able to perform tests for the novel coronavirus. We went from 1 case of suspected community transmission confirmed Wednesday of last week in California to now at least 7, including the country's first death, a man in his 50s in Washington state. New cases being reported in California, Oregon, Washington state, Rhode Island, and Illinois over the weekend. Some were travelers back from affected countries, including South Korea and Italy, and others are connected to known cases. But the rest are raising alarm about how widespread the disease here may now be. A nursing care center in Kirkland, Washington, near Seattle, has 2 confirmed cases, 1 resident and 1 healthcare worker. There are also more than 50 people under investigation there who have shown symptoms. And just about an hour ago, California health officials confirmed 2 cases among healthcare workers who treated that initial patient last week. A study of 2 cases detected almost 6 weeks apart in Snohomish County, Washington, suggests the virus may have been spreading through the community for that whole period of time, and that anywhere from 150 to 1,500 people may have been infected there. Meanwhile, outside the U.S., case numbers are mounting even more quickly. In Italy, they rose by 50% today to almost 1,700, the most of any country outside Asia. The number of cases in Germany doubled to 129. Scotland and the Dominican Republic reported their first cases. In South Korea, Korea and Iran also among the hardest hit countries. Case counts continued their rise as well. Scott.
All right, Meg, thank you. A busy weekend in Washington, D.C. as officials prepare for the worst.
We also have new reporting tonight on a meeting of pharmaceutical executives at the White House. Eamon Javers is in Washington. Eamon.
Yeah, Kelly, that's right. I'll get to that in a second. But just within the past few minutes now, we've gotten some new information from the vice president's office. Remember, he's heading up the virus task force now. They say that the vice president had a meeting on this at the White House today at 4 p.m. A couple of tidbits from this that are important. One is the FDA commissioner told the commission that there are no additional drug shortages beyond what was reported last week. And they say only 20 drugs, they say, are sole sourced from China. So a reminder there in terms of the drug capacity in this country. Also, they're saying that they're preparing assistance to state and local communities by the CDC, and they're preparing measures now for screening outbound passengers from Italy, South Korea, Iran, and China. So all that taking place in the vice president's 4 p.m. meeting today on this subject. This follows yesterday's announcement by the vice president of additional travel concerns. Here's what he said.
The president today has authorized the State Department to increase the travel advisory for Americans to level 4. We are urging Americans to not travel to the areas in Italy and the areas in South Korea that are most affected by the coronavirus.
And we are expecting that pharmaceutical CEO event at the White House tomorrow. Just within the past couple of minutes, getting new details on that as well from a senior administration official who tells me that event will take place at 3:15 p.m. tomorrow. About 8 CEOs will participate in it. They say the purpose is to pursue progress on vaccination. So the idea here is that the president, by bringing all these pharmaceutical CEOs together at the White House, can get their heads together on this problem and sort of urge the entire industry to really focus here, and he can get the latest information from them on how soon they think they might have a vaccine, guys. Back over to you.
Okay, Eamon, stay right there because Meg Terrell has also done some reporting, Meg, on this pharma meeting tomorrow. And what have you found?
Yeah, so we are starting to find out who some of those 8 are, and I actually didn't even know that there were 8, so that's great reporting, Eamon. So far, we've heard about 4 companies that are going. We know that Sanofi Pasteur's head of research, Dr. John Shiver, is going to be there. Johnson & Johnson's head of research, Dr. Paul Stoffels, will be there. Moderna, that's a smaller biotech that has been partnering with the U.S. government in developing a vaccine and seems to be in the lead. Their CEO, Stefan Bancel, is going to be there. And I also just learned that Pfizer is going to be there, guys. We don't know who from Pfizer yet, and it's interesting because that is one company that has not announced that they are working in this space. So perhaps the White House is trying to reach out to companies more broadly to try to see what kind of response there can be.
Important that they're getting such a big collection together. I know you'll be all over that as well, as we will, Meg Terrell. Well, markets have been bracing for imminent action by the Federal Reserve.
Steve Leisman joins us now with what the Fed could do at this point. Steve, importantly, when they might act and whether it would help. You've also been reporting, I should add, on some concerns, which we mentioned off the top of the program, about Goldman Sachs saying this virus could impact the American consumer more than we thought.
Yeah, that's right, Kelly. What began as a concern about supply disruptions from China has now become a worry about how the coronavirus could impact the U.S. consumer, the stalwart of the U.S. economy. Goldman Sachs writing in a note to clients this weekend, there is an increasing likelihood, quote, that shortages of consumer goods from China will weigh on the U.S. consumer spending growth in the spring. Those types of concerns have led markets to count on the Fed to cut interest rates deeply over the next several months and increasingly to forecast emergency cuts. That is, before the Fed's next scheduled meeting on March 18th. But it doesn't appear to be happening tonight from anything we can see. Pantheon writing, quote, delay is pointless at best and deeply counterproductive at worst, given the dramatic tightening of financial conditions. The market now sees the Fed bringing down its benchmark overnight lending rate by a 0.5 percentage point by or during the March meeting and by another 0.5 point throughout the year. So that would be a full 1 percentage point decline in interest rates, with some forecasts that it could even go to zero, as he has done before and throughout the crisis. The president urged the Fed yesterday to make those cuts.
Our Fed should start being a leader, not a follower. Our Fed has been a follower. We need a Fed that's going to be a leader. We should have at least the same rates and ideally lower rates than other countries. We shouldn't be paying more.
At the same time, there is a vigorous debate about the limits of central bank rate cuts in the face of this virus. It won't restore supply from China or prompt business travel, as you heard from Kelly, that's already been canceled. Supporters say, however, rate cuts could halt the market slide and other measures could shore up the banking system and make lending easier, at least doing what it can whether it does much good or not, Scott.
Fed might not be able to wait as long as it does. Maybe that's the biggest takeaway thus far. They did the statement on Friday while the market was still open. Perhaps it wanted to get that out. Market still wants something else to happen. Do you think the Fed can wait until its next meeting?
Can I answer that slightly differently and say I think the Fed wants to wait? I think the Fed would like to see how far it actually spreads, how deeply it's embedded in the economy or in the nation here, and would like some data with which to make that call. I think the sense of your question is 100% accurate. It may not be able to wait. Further slides in the market, these increasing calls by in the market by political officials for the Fed to cut rates may be a kind of pressure it can't withstand.
What about the Ed Hyman thing we were talking about earlier? One of the most respected economists on Wall Street, number one by institutional investor, saying that you're going to get 2 quarters in a row coming up of zero growth. What does he see that the Fed's unsure of?
I think that most people I'm reading right now do not know and say it is a folly to try to forecast even beyond this quarter. His certainty, I mean, Ed is a smart guy, but it's not shared by others. The idea that, hey, look, there are still potential positive outcomes here. That, I mean, increasingly it seems like those are more optimistic than they are realistic. But it's still possible this thing remains contained within the United States and we deal with a supply disruption. If we deal with a quarantining, hunkering down, people not doing massive numbers of things for several quarters, that does change the game, and Ed will be proven correct.
Not just that, even whether there's 2 aspects of this. One is, will it be as bad as he's saying, will it be zero? And then the other one is, the Fed is not the only response we could have here. In some ways, they're the backstop. The first response, and perhaps the more tactically efficient one, could come on the fiscal side. There could be some measures we've talked about, Steve, aimed at helping small businesses make sure if they default on some loans, that they get some wherewithal to keep going for that. Korea, I think, is doing something on the rent side. I mean, in the absence of anything like that, it will have to be the Fed, but they shouldn't necessarily be the first one to step up here.
You're so old-fashioned. The idea of a fiscal policy response, that's the way we used to think of things. Now, like Pavlov's dogs, we're conditioned to say, oh, the Fed ought to act, when in fact I think there's a very good argument that the first line of defense ought to be the fiscal side, ways to target assistance and aid to different places where it might do good. The idea of cutting interest rates, we know, is not going to bring supply back from China, but it could help the consumer.
We appreciate it very much, Steve. Thank you. That's Steve Leisman, our senior economics reporter. Futures indicating another rough day, at least at the start, on Wall Street. Joining us tonight is veteran investor Leon Cooperman. He is the chairman and CEO of the Omega Family Office. Lee, we appreciate you making some time for us tonight. Thank you for being here. You have viewers tuning in tonight, looking at the futures, saying, oh, no, here we go again. They're looking for some hand-holding, I think. When do you think the intense selling is going to stop?
Could have ended Friday. You don't know. Let me just say this. We got to be balanced now reporting. You guys have quoted Ed Hyman of Evercore's zero growth in Q2 and Q3. You didn't quote the fact that he raised his growth rate for 2021 to 3%. But that's not the subject of my comments. Let me just say this. Less than 2 weeks ago, February 18th to be precise, I was on your program, and I said the market was knocking on the door of euphoria. The market was expensive by all historical measures, save relative to interest rates, but the conditions normally associated with a big decline were not present. Those conditions being accelerating inflation. If anything, we're having less inflation, an oncoming recession that clearly is on people's minds now, a hostile Fed, we have the furthest thing from a hostile Fed, or some kind of unforecastable geopolitical event, and let's just put the coronavirus in that category. Well, since that appearance on the 18th, the S&P was at that time 3370. It's now dropped about 12% in a record time. We've had plenty of 12% corrections, but none that I recall in 3 days. And we have gone from complacency to fear in a very short time frame. And to have a strong conviction, and to answer your question about the stock market outlook and what people should do, I think each individual has to have an opinion on 2 items. One is the coronavirus, and second is the election outcome. Now, on the coronavirus, I'm no expert. I'm not a doctor. I have 2 PhD degrees, but they're both honorary, and they're not in medicine. Okay, but I have to believe as an individual, I think with common sense, that with the world focusing on the problem, it's going to be solved quicker than most people think. I'm guessing June, but that is a pure guess. I think we all have to put this into perspective. While the loss of any human life is tragic, the coronavirus has had a much more serious impact on business activity than on human life thus far. And let's hope and pray that it continues that way. Let me cite some statistics without being a statistician. In the 2018-2019 flu season, there were over 35 million cases of flu, over 400,000 hospitalizations, and 34,000 deaths. During the 2017-2018 season, there were 45 million cases of the flu, 800,000 hospitalizations, 61,000 deaths. And in the 2016-2017 season, there were 29 million cases, 500,000 hospitalizations, 38,000 deaths.
But Lee, in none of those instances that you just cited, did they shut down the world's second largest economy? Did they threaten supply chains?
I understand. There is an economic impact.
That's why this is different.
It is different, okay, but I believe when the world starts to focus on the problem, they will get it under control more quickly than people are thinking. For example, I believe Tim Cook of Apple said they're starting up production in China already. What the hell?
Well, look, there are a lot of other companies.
The coffee chain.
Starbucks.
Starbucks, excuse me, I'm having a senior moment here at 77 years of age. Starbucks is starting up production again. And those are good signs. So as regards to coronavirus, I'm of the view, you asked me my opinion. You know, opinions like noses, everybody's got one. It'll be contained sooner than one thinks. The economy will definitely be hurt, but I think we'll avoid a recession, and some of this demand is deferred, not obliterated. On the recession issue, I would observe that consumer income is strong, confidence is reasonably high, interest rates are exceptionally low, and they're going to go lower, which makes it very advantageous to refinance your mortgage and basically very positive for housing. Low oil prices are a big benefit to the consumer.
What if, though, Lee, this does get worse before it gets better, and
give me a second.
And it changes consumer behavior, what has been the pillar of the economy.
And then you have a recession, okay? And if you have a recession, basically a typical recession is a year of contracting GDP, about 2%, peak to trough, basically, and the market drops 25% from the high. And so that 25% off the 3,400 high would take it down to 2,550. I wouldn't say that's impossible. Let me go on, and I would say that I was just saying a moment ago that some of the positive factors: consumer income is strong, confidence is reasonably high, interest rates are exceptionally low. And they're going to go lower. This is going to help housing, refinancing of mortgages, put money in the consumer's pockets. Low oil prices are a big benefit to the consumer. We have 80 central banks easing moves since last May, and more are likely. China has eased 34 times since the virus started, from rate cuts to tariff cuts to easing credit to increasing government spending. So in sum, as regards the virus, call me an uninformed optimist that is long on common sense, okay? So that's my view of the virus. If you believe it's going to be out of control and we're going to be in a recession, step aside because the market will go lower, okay? Second, what do I know is the politicians have to start acting like adults, work together, and stop the finger pointing. And that goes to the press as well. Be responsible in your reporting. On the election issue, I firmly believe the country is not prepared to elect a communist or a socialist. And I'm referring to.
I know who you're referring to, and I honestly I don't want to go there right now.
No, I don't want to go. I said there are two things that are bothering the market. One is the coronavirus, and second is the political outlook.
Sure, okay? I certainly think that the virus is what's gripped investors, and certainly is
no question
the bulk
about it.
of the selling.
When they get finished with the virus, they'll go to politics.
And let me do this.
Let me give you a constructive suggestion, if I may. While the Fed is likely to cut rates, that is not my recipe to deal with the problem. On December 24th of 2018, I wrote the chairman of the United States Securities and Exchange Commission, Jay Clayton, explaining the negative fallout from the quant traders that are roiling the markets, and we should reinstate the uptick rule to slow them down. They buy strength, they sell weakness, and they know everything about price and nothing about value. This volatility is scaring the public. It's ultimately going to raise the cost of capital to business. It's going to affect consumer spending, jobs, tax revenues, etc. 50 to 100-point swings up and down in 30-minute time frames make no economic sense. Why don't they reinstate the uptick rule? The president should stop leaning on the Fed. Chairman Powell knows what to do. He's done a very fine job. Okay? Let the Secretary Mnuchin, President, get him on the phone and call Jay Clayton and ask him, what do we lose by reinstating the uptick rule? What do we lose? Who gets hurt by that?
Lee, I'm going to ask you to sit tight. We're going to take a quick break. We're going to come back. I do want to lean on you and all of the history you do have in the markets, what it's taught you about investing in times like this, in climates of fear like the one we are in right now. We'll do that after the break.
This CNBC Special Report, Markets in Turmoil, is just beginning.
Next up, a live update as trading begins in Japan, a country dealing with an outbreak of its own. Plus, how U.S. airlines are reacting to the new threat. United just made a big move. Will the others follow? Our man on the airlines, Phil LeBeau, is with us live. This CNBC Special Report, Markets in Turmoil, is coming right back.
Welcome back. We are focusing in on the 10-year yield, which just hit a record low this evening. It's on your screen there, 1.103%. We had never seen it go below 1.3% until this past week. Even as futures have stabilized, the Korean market has turned green, but the 10-year note is seeing no relief this evening, 1.1. Let's get to Sherry Kang. She's in Hong Kong. She's got more on the Asian markets for us at this hour. Sherry?
Hi there, Kelly. Selling continues in Asia on this Monday morning. Both Nikkei 225 and Topix in Japan dropping by more than 1%. Japanese yen in 107 range. Now, this is a safe haven, and that's why it's at the highest level since early October of last year. Deep selling happening in Australia and New Zealand. South Korea turning negative after a positive open this morning. Remember, the government there is crafting an extra budget for the coronavirus impact. Back to you.
Sherry, thank you. Sherry Kang. U.S. stocks have shed nearly $4 trillion in value over just the past 6 days.
Let's bring back in veteran investor Leon Cooperman. He's going to talk what history has taught him about sell-offs like this. But, Lee, I'd be remiss if I didn't ask you your reaction to what we're witnessing in the bond market with these yields, which continue to drop and set new record lows. The 10-year tonight at 110. Can stocks stabilize as long as yields keep falling?
Well, the market is basically anticipating further Fed moves. And basically, the bond market's got it right in that respect. But I would just make a comment. I made this comment on February 18th, actually, on your program. I said if the bond belongs at 1.5 or 1.2 or 1.1, wherever it is, you make 4 or 5% in the stock market a year. You don't make 15 or 20%. And the day I was on the program, the market was up 5% year to date.
We've now gone under 110, so it just gives you a kind of idea of the fear that's in the market.
Well, let me ask you a question. A 5-year bet, would you rather own the 10-year government bond yielding 1.1%? Would you rather own a common stock that now on average yields 2.2%?
Yeah, I think
it's a no-brainer.
Right.
It's a no-brainer. I want to get back to what I said before because I think we didn't give it enough time. We have to revisit. If you ask me, cutting the rates or reinstating the uptick rule, I'd say reinstate the uptick rule. Rates are already low enough. Rates are not an impediment to companies to invest and do things. Okay? The uptick rule was instituted in 1938 in response to the abuses that occurred during the Great Depression. It served us well for 70 years. For some unexplainable reason, they eliminated it in 2007. That gave rise and aided and abetted a lot of these quantitative trading systems, which basically exaggerate moves up and down. Okay, in the last half hour on Friday, the S&P moved like 100 handle points. That's it's not related to economics. Now, and it's as simple as that. So what does the SEC lose by announcing they're going to go to a 30, 60, 90-day trial period to reinstate the uptick rule to see what effect it has on markets, whether it makes markets more orderly? What do they lose?
You've mentioned many different historical markers tonight. prior sell-offs in the market. You're talking about the uptick rule back to the time of the Depression. Tell people.
One thing that is the only look relative to past bottoms I'm aware of, the market's still very expensive. The one place that's extraordinarily cheap is relative to interest rates. Okay, that's the bugaboo. You know, if you look at price to book, where the market bottom, dividend yields, things like that, we're very far away from those benchmarks. Okay. Where we're not, if you start booking in interest rates, the spread between, dividend yields and the 10-year government bond is at a historical favorable level relative for the equity market. And so, you'll have to wait to see how this plays out. I don't think interest rates belong at these levels. They're essentially screwing the saver. How do you retire? Let me ask you a question. You're going to work very hard for the next 40, 50 years. Okay, when you go to your financial planner and you ask him, well, what can I assume I'm going to earn on my $2 or $3 million of savings over a lifetime, which is a high number for the average person, and he says to you, you're not going to earn anything of consequence, you can't afford to retire, you got to keep working. Well, that also limits the ability of the young people to enter the labor force if the older people don't retire because they can't afford to retire. So I don't think we're doing anybody a favor by having these interest rate levels. I think we would be doing the right thing by reinstating the uptick rule.
Lee,
and
your insights are valuable. I'm afraid I've got to leave it there. We have a lot we still want to get to in the final half hour of our special program tonight.
Good luck to all the viewers. Don't be on margin. Just know what you own and be patient.
Good words of advice. Lee, we'll talk to you again soon. I know that we will. That's Lee Cooperman joining us tonight on the phone.
Here's what's coming up next in the CNBC Special Report, Markets in Turmoil.
Straight ahead, Big Tech's plan. See how they're trying to keep their employees from spreading the virus. Will it be a model for the rest of the country? Plus, correction course. What last week's violent action on Wall Street is telling top money managers about the week ahead. And big moves from U.S. Airlines tonight. This CNBC Special Report, Markets in Turmoil, is coming right back. The market has awoken to a massive threat. The Dow lost a shocking 12% of its value last week. Tech stocks, some of America's favorites, down 11%.
Worst week since the financial crisis.
Big businesses are now making major changes, calling off key conferences. The airlines canceling flights.
This is exactly what we've been predicting all along.
Tonight, everything you need to know to get ahead of what promises to be another intense, frightening week on two fronts: the economy and the virus that has morphed into a global pandemic. This is a CNBC Special Report, Markets in Turmoil. Once again, here's Kelly Evans and Scott Wapner.
And we start this half hour with a look at the futures, where we could open on Wall Street tomorrow. More red across the board. The Dow right now would open down by more or just about 300, we'll call it, points. This after the worst week since the financial crisis, Kelly.
You might think the futures are somewhat stable, but take a look at the 10-year yield. Unfortunately, this has been something of a leading indicator, and it has moved lower this evening. It just went below 1.1% for the first time ever. A correction is when stocks fall more than 10% from their highs, and every sector of the stock market is now in that position after last week.
CNBC senior markets commentator Mike Santoli taking a look at what might happen next. His latest piece on CNBC.com says, quote, traders see a reflex rally soon, but it is unclear if it can be trusted. Mike is with us live tonight. Hey, Mike.
Yeah, Scott, and it's not just this correction where those powerful rallies that sometimes come after an intense decline are not necessarily trustworthy. That's the nature of these very sharp pullbacks. Take a look at the S&P 500 over the last 3 years to put this drop in some kind of context. We've been talking about this is the fastest 12% loss in history, measured history, essentially. It takes us back to essentially the lows, especially at Friday's lows. We're about at the lows of the summer when we were essentially pricing in a high recession risk. I would also like to compare it to what happened in very early 2018. We also were at an all-time high, also in about 2 weeks went to a greater than 10% correction. And this was a crazy rally we got starting in early February. It perhaps, maybe people think the coast was clear, but look at that long chopping around period. And then, of course, we had September, October of that year. It looked like in October things were stabilizing. In fact, it looked like we had a rerun of that, and then trapdoor opened up again. Now, why is this? Why are we talking about these intense potential rallies because this decline right here has generated so many extremes in terms of the volume of declining stocks, how far stocks are from their trend in a short period of time. And usually that means there are the makings of some kind of spring-loaded rebound. But it's very difficult in these emotionally charged times with so much uncertainty to know. Here's the volatility index. It measures the demand for downside protection in S&P 500 index options. This rush above 40 is certainly extraordinary. We were about 49 on Friday at the highs. Normally, when the market is attempting to make a low, you see this very sharp spike and a quick decline from there. It doesn't usually spend a lot of time up here, but until it does start to decline and suggest that the fever has broken, it's usually a fairly treacherous market, guys. That's the setup we have going into this week.
You also, Mike, have said in this column that the first major bounce you get off a correction like the one we've had rarely holds.
It rarely holds. Now, sometimes it can even recover, who knows, half the total losses that we've experienced to date. But usually it requires some kind of testing process. I do think one of the absent elements right now is time. The outlook has changed so radically, so quickly, the market hasn't had time to necessarily prove that it can be resistant to the incremental, perhaps bad news that we're going to get.
Yeah. Something to keep in mind if you see stocks reverse their early losses, at least like it looks on Monday, and have a gain.
For sure.
Doesn't often hold.
Yeah, Mr. Santilli, we appreciate it.
Well, some airline stocks suffering the biggest losses last week. Shares of Delta and United Airlines down double digits. American Airlines plunged more than 30%. The overall sector struggling with major events and conferences being canceled worldwide. Our Phil LeBeau live in Chicago tonight for us. Phil.
Scott, the airlines are moving quickly to adjust to rapidly falling demand, both here in the United States, but more importantly, overseas. We say more importantly because that's a lot of those corporate travelers who are not going on these trips, whether it's to Europe or to Asia. Today, American waiving change fees for tickets, all tickets, including here in the United States, that are bought between now and March 16th. The American ticket changes must be made 14 days in advance. As you take a look at shares of American, remember, it also suspended its Milan service through April 25th. 25th. Delta, meanwhile, also halting its Milan flights. That will happen through May 1st. And United still flying into Milan. Will be interesting to see if they change that. Today, a memo from United CEO Oscar Munoz, and this summarizes basically the attitude of a lot of the airlines right now. Based on current trends, it is likely that additional schedule reductions will be necessary. United is now offering some pilots, mainly those who are flying trans-Pacific routes, vacation at a reduced pay rate. United is also postponing its next class of pilots that it was scheduled to hire, still planning on the whole number of pilots that they expect over an extended period of time, out several years. But this next class, look, if they're not going to be doing these flights, they're not going to be hiring these pilots. And finally, take a look at shares of JetBlue and Alaska. Remember, they have also waived their ticket change fees. Guys, those are for flights through June 1st. Do not be surprised if this week we see more airlines doing what American said it was doing today, and that is waiving ticket change fees, cancellation fees for all flights, not just internationally, but also here in the U.S.
All right, Phil. And again, these airline stocks, some of the worst in the market last month. We appreciate it. Some big tech names are also the ones in the top holdings of your retirement and pension funds, but all of them sliding lower last week.
Facebook, Amazon, Alphabet dropping 8% last week. Apple shares down double digits as the company's supply chain remains an area of concern. Even Microsoft, one of the only stocks to close up on Friday, was down 8% for the week overall. Take a look at chips as well. Hit hard. AMD, Intel, NVIDIA, all getting crushed.
John Fort is with us tonight talking about what's next for the tech sector. John, if this virus does worsen and spread.
Yeah, we're really moving into fuzzy territory here because in a weird sort of way, when you're talking about chips, when you're talking about hardware and supply chains, it's easier to measure what the impact of that is when you've got an impact on supply. Right now, we just heard about 3 new cases of COVID-19, the coronavirus, in Santa Clara County. That's the heart of Silicon Valley, stretching from Palo Alto in the north down through San Jose to Gilroy in the south. You got everybody from Apple, Google, Adobe, et cetera, NVIDIA, all in that area. You've also got cases in the Seattle area where, of course, Amazon and Microsoft are. Been reaching out to those companies to see what kind of practices, workplace practices they might be adjusting. No really clear word yet. And you might think these are tech companies, so they can do video conferencing. Everything will be fine productivity-wise. Well, That's not really the trend in things like software development right now. There's a system called agile software development that's been the rage for quite a few years. Yes, you can work remotely, working agile, but really face-to-face communication is a big part of that for local teams. So if you do have people who need to work remotely, I think there's a legitimate question. Are they going to be as productive as they could have been otherwise? And it's not like you're looking at ports and shipping containers to say, are they shipping their code as often and as accurately as they used to? It's going to be really hard to see. Next thing we're going to have to watch is things like conferences. Apple's Worldwide Developer Conference, usually in early to mid-June. Google I/O, their developer conference around Android and other things they do, usually in mid-May. You can say, oh, these are conferences, they don't really matter. Well, these are the times when these companies, these major platforms, are getting in front of developers, their most important developers, and say, here's the future. Here's how we want you to code. Here's how we're going to help make you more productive and sell more software to your customers. If they don't do that, if they can't do that, what happens? I don't know. Yeah, maybe they can do a video conference, but again, that's not how this group of people is used to working.
Yeah, point being, we often think about manufacturing and the loss of production there and the way it would hurt the economy. Even though software, it's a little bit harder to see, the impact will still be felt, won't it?
It will indeed. And, you've already mentioned the Game Developer Conference, not happening right now. They're pushing it out to summer. There are some important platforms that are launching at the end of the year. New PlayStation, new Xbox. Developers want to do their best work for that stuff. That's real dollars and cents. That's going to be happening in the holiday season. If they don't get the best information, what happens? I don't know.
Any chance they're delayed, you think?
I don't think that you're going to delay something like a major console launch over something like this. You might not have the number of units out there that you want because of manufacturing issues, should those persist, but too early to say.
Unless you can't test it the way you otherwise might if it's an actual product you need to hold and touch and mess around with. John, thank you. That's John Fort. This CNBC Special Report, Markets in Turmoil, is coming right back.
When we come back, the city that's become the American epicenter for the coronavirus, Seattle. We're there live tonight as cases jump. Plus, as Americans get ready to go to sleep, Asia's financial capitals are up and running. See what it all means for investors here in the United States. This CNBC Special Report, Markets in Turmoil, is coming right back.
Welcome back. Australia's powerful mining industry under threat from this virus.
Will Kalouris is standing by in Sydney for us tonight with more on that and the Nikkei, which is now trading in Japan. Will?
Yes, that supply chain shock really is hitting Australia's major miners. This is despite the fact that steel production does continue in China. But a lot of these miners are saying that should it continue into March, this coronavirus impact, that's when they're going to see some significant losses. The RBA here in Australia, the central bank, is considering cutting its rates tomorrow. Many are expecting that to happen. But in terms of Japan, there's going to be no such luck when it comes to the central bank. Then, if you look at the charts, they're off the Nikkei by almost 1.5% today. So it is going to be something to watch whether we do see this weakness pervading throughout the rest of the session when it does come to Japan. Back to you guys.
All right, Will, we appreciate it tonight. We are closely monitoring the spread of the coronavirus across the U.S.
The growing epicenter of the outbreak seems to be Washington State, which reported the nation's first death from the virus. Our Scott Cohn live with us tonight from Kirkland, Washington, just outside of Seattle. Scott?
Yeah, Scott, Governor Jay Inslee of Washington has declared a state of emergency here, and this nursing facility behind me is a big part of the response both at the state and the federal level because there were 2 cases here confirmed, 1 worker, 1 resident, and 50 other people or so who have exhibited symptoms. I want to show you some video from just a short time ago. One person here was transported with what we were told was a respiratory issue. We don't know if this is COVID-19 related or if any of those symptoms are, but it just suggests the level of activity here. And all in all, the numbers here in Washington State, and this is going to get academic at a point, and these numbers are going to change. But according to the State Department of Health, there were 8 confirmed cases as of earlier today. Again, that may change. 4 that are people under investigation pending the results. So those could turn out to be positive, and 31 negatives. But as the testing continues, again, those numbers are going to change. But those confirmed cases do include the first COVID-19 death in the U.S.
Scott, we appreciate it.
The person who died was a patient at Evergreen Hospital who had underlying health conditions. It was a male in his 50s. He was not a resident of the long-term care facility. We are now in the process of working with the long-term care facility.
One more somewhat ominous number, some 263 people in Washington state under observation. That includes the people here who have exhibited symptoms, as they look to see whether this virus has been spreading locally. Remember, the first case in the U.S. was recorded here in Washington state back in January, and there are some fears that it has been transmitted through the community for several weeks since then, guys.
Okay. Scott, thank you. That's Scott Cohn for us tonight. It's been a busy news-filled weekend, and it will impact the markets tomorrow.
We'll get you ahead of tomorrow's news flow next with the very latest headlines, and some are just crossing. Stay with us. Welcome back. Here's how the U.S. markets are shaping up this evening ahead of tomorrow's first trade and after an awful week. The Dow is down about 300 points. That's been relatively stable, Scott, wouldn't you say, for most of the past hour? A decline in the S&P of 38 points implied at the open right now.
The big story of the night is the 10-year. That's what we've been watching closely, dipping below 110. Right now, it is at 106. That is an all-time low for the 10-year, and that is certainly weighing on stocks. By the way, we do have some breaking news regarding the virus. Our Meg Terrell is back with us to deliver that. What do you have?
We do, guys. The first case has been confirmed in New York State. This was in a young woman in her 30s who had traveled to Iran. State saying that this woman contracted the virus there in Iran, and since she returned to the state, she has not been out in the community. She is currently isolated in her home. She does have respiratory symptoms, they say, but has been in a controlled situation since arriving in New York. Guys, we don't know where in New York this woman lives, whether she's in the city or elsewhere. Her her sample was confirmed in Albany. That doesn't tell us, though, where she lives.
The governor tonight is saying, quote, there is no cause for surprise. This was expected. As I said from the beginning, it was a matter of when, not if, there would be a positive case of the virus in New York. There is no reason for undue anxiety, says the governor. The general risk, he says, remains low in New York. We are diligently managing the situation and will continue to provide information as it becomes available. That's the latest from New York Governor Andrew Cuomo, the first confirmed case of the coronavirus here in New York State.
Mike Santoli here. Just a final comment, Mike. The interesting thing is futures did not go much lower on this, although the 10-year yield did slide.
That's right. And so the futures essentially stable and also holding well above Friday's early lows, perhaps tells you we built up a little bit of an expectation we're going to get negative headlines. Now, the stock market has not been able to bottom much until bond yields do. We'll see if that pattern continues.
I'd just add real quickly that the stock market has been behind the bond market in terms of falling, and that's been a pretty good bet to follow it. Two things I'm watching, which is the global central banks responding, and then there's data. We're going to maybe get a manufacturing data out of China this evening, and tomorrow we get U.S. manufacturing. Perhaps some impact of the coronavirus. Early days yet, but might see the first signs in data this week.
So what matters more to the Fed at this moment, dropping stocks or dropping bond yields?
Dropping stocks. Dropping stocks has an economic impact that dropping bond yields do not.
Now, speaking of the drop in bond yields, the 10-year yield just went to 1.05% this evening. Again, we were not below 1.3% in history until last week, so this has been a pretty sharp move lower.
For up-to-the-minute updates all night long, please go to CNBC.com.
Now, we thank everybody here for being with us on this Markets in Turmoil special. We'll be live at 5 a.m. for Worldwide Exchange. That's it for this evening. I'm Kelly Evans.
I'm Scott Wapner. Have a great evening. We'll see you tomorrow. Shark Tank is next.